Hi there and welcome to this thought leadership video where I'm thrilled to be joined by First Abu Dhabi Bank's Chief Strategist Glenn Wepener. Glenn, great to see you. It's been about 2 years since we've done some thought leadership content, so how have you been?
I'm good, thanks, James. Always nice to see you. I must first apologise that it's taken so long to do this again. I know we tried a number of times this year to pin something in the calendar, but we're here now. So looking forward to it, and thanks again for the invitation.
It's good to see you again. So much has happened since the last time that we spoke, not even that, since this year, since H1. So give me your current state on the oil market, please, Glenn.
Yeah, so look, at the start of the year, actually, it looked like 2025 prices were going to remain reasonably elevated. We were starting to see good demand growth. We were starting to see, especially in certain fuel products, we were seeing good demand also from the petrochemical sector. IATA was talking about potentially another record year in terms of air passenger traffic as well. The global economic outlook in general was looking decent, particularly in the US. OPEC Plus, they still had their output cuts in place at the time, and of course we also had all those some quite serious geopolitical risks that were ongoing. But then fast forward a few months and things started to change quite significantly. President Trump's Liberation Day tariffs were announced. That of course led to some uncertainty in terms of the economic outlook, and that continues today. In May, OPEC Plus began to announce that they were going to begin starting to release more barrels back into the market. That was so that a number of the key producers could reclaim some market share. So what that means is that 2.2 million barrels per day of that voluntary additional output cut was going to be returned to the market, and basically the cuts nullified by the end of next month, which is roughly about a year ahead of schedule. So we've seen a softening in prices, and more recently as well, of course, some of those geopolitical risks have stabilized at least or calmed down. Brent is back down in the mid-60s as we are today. Back in April, we adjusted our forecast for Brent. We lowered it slightly to $67 average for 2025. We haven't changed it at this point. But obviously then we need to see how certain dynamics play out over the next few months. Inventories do appear to be building again, crude inventories that is, not so much on the product side. And also, of course, we have that upcoming Trump-Putin summit that is due to take place in Alaska tomorrow, so people will be looking at that one as well. But I think if we're right and Brent does average $67 a barrel this year, it's still it's good for consumers. It's fairly okay for many of the producers. The UAE, the budget break even here is closer to $50 a barrel, so that's okay.
Let's touch base on President Trump and President Vladimir Putin meeting tomorrow in Alaska. So yep. Are you expecting massive groundbreaking changes to happen, or do you think it's just going to be BAU and this is the first of many other interactions that are going to be happening this year?
I think, look, obviously any process or discussions that push us closer to ending the war in Ukraine is of course a good thing. However, I'm not convinced that we're going to see a major breakthrough tomorrow or a major announcement specific to the Ukraine issue. The reason I say that is because we know that both sides are still very far apart, the Ukrainians and the Russians, in terms of their demands and in terms of their expectations. From what I understand, the meeting itself is going to be just President Trump and President Putin. It's not going to involve President Zelensky or the Europeans either initially. Earlier this week, the White House press secretary did indicate that she tried to dampen down press speculation about what might come out, talking about this being more of a listening session. Although Trump, as you probably saw overnight, he's been much more vocal in saying that, unless a ceasefire is agreed, he's going to do something more on sanctions on the Russian side. So we need to wait and see. I think there is a chance that we might get some sort of movement towards an interim ceasefire at the very least. But a big groundbreaking breakthrough, I think, unlikely. What I would say, though, in addition, and separate to the Ukraine issue, I'm sure that the two presidents are not just going to talk about Ukraine. They're going to talk about other things, global issues as well. And importantly, I think probably US-Russia relations going forward. So there may be some separate announcement around that. That's a possibility. But we have to wait and see.
Indeed. This year's been dominated by that word beginning with T, tariffs. So let's focus a bit on India. So do you think that additional tariffs are going to be a threat to the Indian economy?
Well, certainly, yes. I mean, we have that 25% baseline at this point as well. And then, as you mentioned, the additional 25% penalty that President Trump has implemented due to India buying, well, as long as India continued to buy Russian crude. But that specific tariff is only due to come in at 27th of August. What we are starting to hear is that some refiners in India have begun to source other supply. There was last week, apparently one of the larger refiners in India actually purchased 1 million barrels of Nigerian crude for September delivery. So I think we're probably going to see a trend, that trend developing further. I think probably the refiners will also start looking to get barrels from the Gulf region as well, because that traditionally was their primary source of oil in the past prior to the Ukraine war. So look, I think President Trump is obviously trying to use it in a two-way tactic. One is to try and get some sort of trade deal with India that would be more favorable in terms of the US. But also, of course, he's using it, I think, to put pressure on Russia in order to try and get some sort of ceasefire agreement. So.
Well, let's go back to US crude production. Will lighter government regulation on conventional energy enhance greater output for the US?
Look, I think it's true. I mean, President Trump has, since he came into office, talked about loosening up, well, they've started to move in loosening regulations, particularly on the conventional oil and gas sector. But because he wants them to produce more, right? The issue is, though, that obviously these are private companies. They have shareholders that they're beholden to. They need to produce good returns. Over the past few years, they've focused a lot more on, which I've mentioned before, on generating positive cash flows rather than investing in opening up new fields. So I don't really think it's going to have much of an impact what the White House does. The only thing really that would, I think, increase production get these companies to invest more in terms of increasing production is really where the price of WTI is. Right now we're sitting, I think this morning it was around $63. And there is a large part, particularly within the shale sector, where the break-even has moved towards $65 a barrel. So I think unless we see prices move above that for a sustained period, then I don't really see a huge impact from what happens on the regulatory side.
So we've covered Russia, we've covered India. Let's touch base a bit on Iran. So the previous videos that we've shot, many times you've mentioned the JCPOA agreement. It looks like that deadline is going to be hit in October. Obviously, the strikes on US and Israel hasn't helped. So what's your current perception on Iran, Glenn?
Yeah, so after that, the 12-day war between Israel and Iran, obviously we're in a ceasefire period. I don't think either side really want to reignite direct confrontation at this point. But obviously, there needs to be some movement, I think, in terms of the talks, on a resumption of the talks at least. There was a meeting, you probably remember, a couple of weeks ago between the so-called EU3 and Iran in terms of sounding out the possibility of restarting talks. There's been no movement since then, although there was some comments by the Iranian foreign minister this past Sunday that they've had received messages from the US in terms of maybe re-engaging. I guess the direction of travel for this is really going to be dependent on what happens in Tehran itself. Whether the hardliners are in stance or whether the more moderate faction is in terms of getting these talks back on. Certainly, the Iranian economy needs it. The Iranian economy has been struggling for some time now because of sanctions. President Trump has introduced some more enhanced sanctions targeting Iran's oil exports, which appears to be having some impacts, because we're seeing reports from Refinitiv, from Kepler in recent weeks that offshore storage of Iranian barrels has started to grow over the past couple of weeks. Iranian economy, as I said, is struggling. I mean, inflation in July was at just over 35%. It's probably going to move towards 40% by the end of this year. We have chronic power shortages, water shortages, the economic growth rate of the country. IMF is looking at a very small 0.3% growth this year. So the lifting of sanctions, I think, is key for the economy to recover, and I'm sure the Iranians acknowledge that. It's just really, as I said, going to be a question of red lines. Iran has indicated that it's one of its red lines is still its uranium enrichment, but hopefully that can be overcome. Europe and the UK announced just a few days ago that they are going to move towards the UN in terms of snapback sanctions unless Iran returns to the table. So hopefully, that does start, and there is some give and take in terms of reaching an agreement so that sanctions can be lifted, and the economy can start to recover again. Of course, if that doesn't happen, then obviously there is a risk of renewed confrontation, particularly between Israel and Iran. But hopefully that doesn't come to that.
Indeed. Okay, so let's keep it within this region. What other risks do you think that we should factor in, or that you want to touch base on?
Tragically, the Gaza conflict looks like it's going to continue for the time being, which obviously is a risk to the Levant still as well, the Levant region. I think we need to keep a close eye on Syria. Obviously, we have a interim administration there. It's extremely important that the country stabilizes. The lifting of US sanctions is obviously a step forward. There's a number of countries that have committed to providing Syria with financial aid and helping it to rebuild the infrastructure. But the country itself, as you probably know, there are various groups with various aspirations. There are various ethnic groups. We saw a recent jump in, a recent sharp rise in fighting in the south, in ZAWYA, very recently. So as I say, on the ground it remains very fragile, and that's why I think we need to keep an eye on it. But on the optimistic side, a stabilized Syria with its economy starting up again would be good for the region as a whole.
Yeah. Glenn, it's always insightful, it's always informative, it's always incredible to have you. Let's not leave it 2 years until the next time I see you.
Sorry,
but
James,
thank you so much for your insights, and thank you very much for your time.
I appreciate it. Good to see you.
Thanks Glenn.
James. Thank you.